James retired at 65 after 34 years as a civil engineer in Columbus, Ohio. He owned his home outright, no mortgage, no debt. His financial advisor had been with him for 11 years. Before retirement, they sat down and went through everything: income, savings, Medicare, Social Security timing. His advisor told him he was in great shape. James paid $7,200 a year in property taxes every year. For 9 years, that bill arrived in November. And every year, James paid it because no one had ever told him about the 5 county applications that could have lowered that bill by more than $2,000 a year. Not his county, not his advisor, not a single piece of mail. 5 forms, free to file, available every year. And for 9 years, James left over $18,000 on the table, not because he did anything wrong, because nobody sat him down and explained these documents existed. Right now, in every county in this country, there are applications your local government will never proactively send you forms that reduce, freeze, defer, and protect the value of the home you spent decades building equity in. Most retirees over 60 never file a single one. In a moment, Robert is going to walk you through all 5, $18,900. That is what 9 years of unfiled applications cost, James. Not a scam, not an audit, just 5 forms his county offered and no one ever mentioned. This is for informational purposes only and not financial, tax, or legal advice. Please consult a qualified professional for your specific situation. My name is Robert Paz 20S, your guide to the retirement tax moves most advisors never bring up. If you find this helpful, hit subscribe. Robert covers the property tax and retirement income strategies your county and your advisor may not be volunteering. And drop your state in the comments below. Robert will tell you exactly which of these 5 documents apply where you live. Today, I am going to walk you through all 5 documents, what they are, what they do, and exactly who qualifies. I am going to explain which states offer the most powerful versions of each one and where the deadlines fall. And I am going to show you the one document that has nothing to do with your county at all, but could save you the most money of all 5 when you eventually sell. Here is the thing about property tax relief in America. It is not hidden. Every one of these programs is publicly available, created by state legislatures specifically for homeowners in retirement. But the system is entirely opt-in. Your county assessor's office does not track your age. It does not monitor when you turn 65. It does not send you a letter saying, "Congratulations, you now qualify for 3 additional exemptions." You have to know they exist. You have to find the forms. You have to file them, often by a specific deadline, often annually. And if you miss the window, you wait another year. This is how James lost $18,000. He qualified every single year. The forms were available, but no one told him, not the county, not his advisor, not the title company when he refinanced 11 years ago. The programs exist because state governments recognize that retired homeowners on fixed incomes face a specific problem. Property values go up, property tax bills go up with them, but income does not. These 5 documents are the system's answer. Most people just never use them. Document number 1 is the Homestead Exemption. This is the most widely available property tax reduction in the country. 46 states offer some version of it. The concept is simple. If the home is your primary residence, your county reduces the assessed value used to calculate your tax bill. In most states, this exemption is between $25,000 and $75,000 off your assessed value. In Texas, the general homestead exemption is $100,000. In Florida, it is $50,000 structured in 2 tiers. In Illinois, you get $10,000 off your equalized assessed value, which in practice can translate to several $100s per year off your bill. Here is the problem. In most counties, this is not automatic. You file it once, it stays on, but you have to file it. And in some states, including Ohio, Illinois, and parts of Texas, there is an annual re-verification requirement. If you miss it, you lose the exemption for that tax year. James had his homestead exemption, but that was only document 1. He had no idea there were 4 more. Document number 2 is the one that cost James the most money, the senior assessment freeze. This is available in over 20 states, and in some counties it is the single most powerful form a retired homeowner can file. Here is how it works. Once you reach a qualifying age, usually 65, though some programs start at 61 or 62, and your household income falls below a threshold, your county freezes the assessed value of your home at its current level, not the tax rate. The assessed value. What that means is this. If your home was worth $280,000 when you filed, your property taxes are calculated on $280,000 for the rest of the time you live there, even if your home appreciates to $400,000 or $500,000. In Illinois, this is called the Senior Citizens Assessment Freeze Homestead Exemption. In Texas, it is the over 6.5 Homestead Exemption Freeze. In New York, it is the Enhanced STAR program. In Colorado, it is the Senior Property Tax Exemption. Different names, same mechanism. James lived in Ohio. Ohio's homestead exemption for seniors is income tested and provides a fixed reduction. He qualified from age 65. He never filed. For 9 years, nobody told him this form existed. Document number 3 is what most states layer on top of the standard homestead exemption specifically for seniors. Think of it as a second exemption that stacks. In Florida, if you are over 65 and your income is below a threshold set by your county, you can claim an additional exemption of up to $50,000 on top of the standard homestead exemption. That is potentially $100,000 off your assessed value, but only if you file both applications separately. In Texas, homeowners over 65 receive an automatic $10,000 school district exemption on top of the general homestead exemption, but the application for the over 6.5 layer must be filed with your county appraisal district. It does not apply retroactively. In Georgia, the state offers a school tax exemption for homeowners over 62 that can eliminate nearly all of the school portion of your property tax bill. In some counties, that is the majority of the total tax bill. These stacking exemptions are where the real money is, and they are the ones most commonly missed because they require a separate application most homeowners do not know exists. Document number 4 is the most underused of all 5, and in many ways the most powerful for cash flow constrained retirees. This is the Property Tax Deferral Program. 9 states currently offer some version of formal property tax deferral. California, Colorado, Florida, Illinois, Iowa, Maine, Oregon, Texas, and Washington. Several others have county-level programs. Here is how it works. If you qualify generally based on age and income, you can defer paying your property taxes entirely until you sell the home or it transfers to an heir. The taxes accrue as a low-interest lien against the property. You do not pay them while you live there. Think about what that means for a retiree on a fixed income paying $8,000 a year in property taxes. Deferral converts that annual cash drain into a future payoff from home equity. You stay in your home, you preserve your monthly cash flow. The county gets paid when the house eventually sells. In Oregon, the deferral rate is just 6% per year on the deferred amount, lower than most credit cards, lower than most home equity loans. In Texas, the deferral is interest-free for qualifying over 6.5 homeowners. This program exists in most of these states specifically because legislators recognized that retirees were being forced out of homes they owned free and clear simply because they could not cover the annual tax bill. The application is one form. Most retirees have never heard of it. Document number 5 is the only one that has nothing to do with your county assessor, but it may protect the most money of all 5 specifically when you eventually sell. Section 121 of the Internal Revenue Code gives qualifying homeowners an exclusion of $250,000 in capital gains, $500,000 for married couples when they sell their primary residence. This is one of the largest tax breaks in the entire tax code, and it is almost entirely self-managed. Here is the problem. The exclusion applies to your gain, the difference between your selling price and your cost basis. Your cost basis is not just what you originally paid. It includes every improvement you have made to the home. A new roof, a kitchen renovation, an addition, solar panels, new HVAC system. Each of those expenditures legally increases your basis and reduces your taxable gain, but you have to document them. Receipts, contractor invoices, permits, every improvement project that added to the structural or mechanical value of the home. And these records need to go back to the day you bought the house. Most retirees who have owned their home for 20 or 30 years have zero organized documentation of what they spent. If their home appreciated significantly, and most have, they may be sitting on a gain that partially exceeds the exclusion. Without the basis records, they cannot prove the deduction. Document number 5 is not a government form. It is a folder, physical or digital, that contains every improvement receipt, every contractor invoice, every permit you have ever pulled on that house. If you do not have this, start building it now. Photograph your old receipts if the ink has faded. Request copies of permits from your county. The gain clock is running. Here is the practical piece. Every county in the United States has a website for its assessor's office or property appraiser's office. That is where you find the Homestead Exemption, the Senior Freeze, and the Supplemental Exemption Applications. Search your county name plus the words Senior Homestead Exemption or Property Tax Exemption. Most applications require 3 things: proof of age, a driver's license or passport proof that the home is your primary residence, and in income-tested programs, your most recent tax return. Deadlines vary. In most states, you must file by March or April to receive the exemption for that tax year. Missing the deadline means waiting a full year. This is not retroactive. For the deferral program, search your state name plus Property Tax Deferral Senior. Not every state offers it, but if yours does, the application is typically available through your county treasurer's office. For Section 121 documentation, this is something you build yourself. Start with what you have, pull permits from your county if you can, organize every receipt you find. Going forward, every improvement project gets documented the day the work is done. One more thing. If you have already been in your home for years and just discovered these exemptions today, in most states you can request a retroactive correction for at least one prior year. Call your county assessor's office and ask whether a prior year exemption filing is available. In Ohio, it is. James did exactly that. James found out about documents 2 and 3 18 months ago. He contacted his county assessor's office, filed the senior homestead exemption, and requested a prior year correction for the year before. His property tax bill dropped by $2,140 for that year, and every year going forward. He also built his Section 121 basis file, pulled permits going back to 2008, found contractors he had not spoken to in a decade, reconstructed 6 renovation projects. Nobody sent him those forms. Nobody told him the deferral program existed. Nobody flagged that his basis file was incomplete. He found it here, and he acted on it. You are not James yet. If you own your home and you are over 60 or approaching it, every one of these 5 documents is available to you right now. The homestead exemption, the senior freeze, the supplemental exemption, the deferral option, the basis tracking file. 5 applications, most of them free, most of them taking one afternoon. The county's not going to call you. Your advisor probably will not bring this up unprompted. This is yours to act on. If this helped you, hit the like button. It takes 2 seconds, and it helps more retirees find this information. Subscribe if you have not already. And if you know someone who owns their home and is over 60, send them this video today, not tomorrow. Pause 2. 4S today. Drop a comment below what state do you live in and which of these 5 documents have you already filed. I read every single one, and the most common situations become future videos.